A very good morning to my dear children. As you all know that we are on chapter number 3, which is source of finance for a joint stock company. Till now we had done long-term source of finance for a joint stock company, and from today onwards in our online class we would be doing short-term source of funds for a joint stock company. There are 7 ways in which a joint stock company can raise short term sources of funds. The first one is public deposit. Public deposit, as the name itself suggests, it refers to the deposit of money made by the public to or with non-banking company. It basically represents loan from the public, including the employees and the shareholders. This method of deposit developed when our country did not had well established banks, and due to the following reasons it is still popular among the citizens of the country. The first reason is economical. The interest which a company pays to its depositor is comparatively lower than the interest charged by the bank. That means if a company borrows funds from a bank, it has to pay higher interest than to its own depositors. Secondly, interest paid can be used can be deducted as an expense for income tax purpose. Second advantage of public deposit is it is simple. Reason, administrative cost of deposit is comparatively lower in comparison to shares and debentures, and very less formalities are involved in public deposit. Third, it facilitates trading on equity, which in return improves the reputation of the company among its shareholders. Fourth, no charge on asset, thus helping the company to use these assets in raising loan from some other bank or financial institution. Fifth, medium term. Since funds are borrowed from wider public, these funds can be used for longer periods in comparison to bank loans. Sixth, flexibility, thus helping the company to avoid overcapitalization. As well, deposits can be repaid when they are not required. Seventh, no interference. Public depositors have no interference in the management of the company, thereby lessening the involvement in the management of the company. Eighth, wide contacts. Since money can be raised from people from different walks of life, this helps in increasing the chances of raising money through issue of shares and debentures. Public deposits has some demerits. First is they are unreliable because depositors may withdraw their money when they feel company is in shaky position. Secondly, risk to investors. Since no security is offered by the company to the investors, they face high risk. Third, this facility of public deposit is not available to new concerns. Fourth, it restricts the growth of capital market, and due to speculation this leads to over trading. The second source of finance is commercial banks, or also called as bank credit. Commercial banks provide short-term finance in various ways. First is loans and advances. A lump sum amount is credited to a separate loan account which is in the name of the borrower. Interest is charged on the full amount from the date of sanction, and loans are generally secured or unsecured. Second is cash credit. It is basically a running account from which the amount can be withdrawn and paid back from time to time whenever it feels convenient. Interest is charged only on the amount utilized, and borrower is allowed to borrow up to a certain limits which depends upon his financial position. But this facility is not available to everyone. This facility is available to firms who have high credit standing only. Third, bank overdraft. As the name itself suggests, that over withdrawing than what you have or what is credited in your account. It is basically given to a regular customer, especially those customers who have current account. Interest is charged on the amount actually over withdrawn and not on the amount sanctioned by the bank. This facility is to basically take care of a temporary shortage of working capital. Fourth, discounting of bills. It means procuring or taking cash from a bank in exchange for a credit instruments. Bank in return charges some commission for this service by paying a price lower than the face value of the credit instrument. The holder of the instrument remains liable to the bank if the instrument is dishonored or not paid on maturity. The merits of bank credit are: firstly, it is flexible because it can be repaid whenever desired. Secondly, bank maintains secrecy of the borrower's affair. Third, bank provides funds in many ways, so borrower has a choice. Fourth, bank do not interfere in the management of the client's business. Fifth, loans can be repaid in easy installment. However, bank credit suffers from the following demerits. First, lot of formalities have to be fulfilled and satisfied. Asset has to be mortgaged. Funds are available only for a short duration of time, and bank charges high rate of interest. Thank you.